Welcome to The Other Side of the Table with me, Tom Frogger. Raising money in biotech, tech bio and life sciences is crucial and complicated. In this podcast, we'll sit down with specialist investors to understand how they see the market, how they assess potential deals, and the mistakes they see time and again that you can avoid. This time around, I'm with Mark Wyatt, Investment Director at Northern Gritstone, a group focused on realising the potential of innovations from universities in the north of England. In this episode, you'll hear about the importance of purpose to investors, what the due diligence process is really about, and why you shouldn't be afraid to show the weaknesses of your business as well as its strengths. Welcome back to The Other Side of the Table, and I'm really pleased to be joined by Mark Wyatt this week. Mark, welcome to the show, first of all.
Thank you. Glad to be here.
Good to see you. And so, Mark, you're with Northern Gritstone, and I thought it'd be useful to start by talking a little bit about that organisation, because it's slightly different than a venture fund or other types of groups. So it'd be great to talk about
sure.
Northern Gritstone first.
So Northern Gritstone, we are an investment company focused on IP-rich, science-based businesses based in the north of England.
Mm-hmm.
So as you say, we're not a fund per se. We invest off the balance sheet. So it has some differences in regards to, the shutters don't come down. We don't need to return capital after a particular given period of time. So I guess that puts us in the patient capital bracket. Northern Gritstone came about. The genesis was three of the large northern universities, Leeds, Manchester and Sheffield, wanting to try and redress an imbalance between the amount of money that goes into Golden Triangle university spin-outs versus the money that goes into the northern institutions, despite the fact that their research income and IP output is on a par. So there's just an opportunity, I think, for investors to find good value propositions in the north of England. As I say, the Gritstone investment remit is broader than just doing university spin-outs. Mm-hmm. So we're looking for any IP-rich opportunity across the north of England. And in terms of the stages of investment, again, you would think with the university focus that the perception might be that we're a seed fund, where we're not afraid of doing seed stage investments out of our university partners. In fact, we're really keen, and that's going to be a big part of what we do. But we're also very happy to do late stage investment opportunities, and there's no better exemplar of that than the pragmatic deal that closed recently, which we participated in. So in terms of Gritstone, we manage 320 million of capital. We're sector agnostic, given the sort of rich diversity of opportunity we're going to see from the universities. We've not focused on any one particular sector, but typically we're going to be doing maybe half the capital into life science opportunities, half the capital into deep tech opportunities. And life sciences is a fairly broad church. So we will look at all different sorts of opportunities, from therapeutics, diagnostics, medical devices, digital healthcare, tools companies, providers to the industry. So it's a pretty broad remit that we're interested in, which is exciting and challenging in equal measure.
No, absolutely. And it's long been an issue, hasn't it? This kind of issue of fundraising for companies that are outside of the Southeast. And as you say, there's lots of institutions across the north, but also in other parts of the country that the caliber of the research is so high, but they get stifled by lack of investment opportunities and things like that.
Yeah, no, that's true. And Northern Gritstone on its own, we're not a silver bullet for the funding challenges of the north, but actually it's quite pleasing. I kind of think about it as, can we have a catalytic effect? Can we multiply up our money by making syndicates easier to create? Lead deals where maybe it's been a struggle to find the lead, and just make a difference to the to the overall amount of investment activity that's going on. So we have an approach to investment that says, we'd prefer to syndicate. Some of the deals that we do are relatively capital intensive. So you can't, have a larger fund, you can't necessarily fund the entire journey on your own.
Yeah.
So very open-minded to syndicating. I'm really pleased to observe and report that, we aren't on our own in this. So we're additive to what's going on. There's always been an ecosystem with some really sensible investors in the north of England, but we're seeing, some of the national funds showing, real genuine interest, putting capital to work. So Octopus, IQ Capital,
Yes.
Foresight, Par. We've invested with all these guys coming into deals that we're excited about, but equally they are. So they're not just sat there going, we'll only do stuff on our doorstep. So in terms of the barometer of state of the nation, I think it's as healthy as it's been in terms of being able to raise capital in the north. And we've got next rounds of MPIF coming online in the near future. So it's looking pretty positive. If you were an early stage business looking for venture funding on our patch, I think it's not a bad time.
No, that's good. That's good. Being from Manchester myself, I'm pleased to hear that.
Yeah, absolutely.
And you mentioned earlier that the group as a whole is sector agnostic, but obviously a big focus on life sciences, and that's your background as well. That's been where you've spent a lot of your time.
Yeah. So yes, there's a few of us. We're only a small team. We're a startup ourselves, which gives us a bit of empathy with the journeys that some of our early stage companies are going on. But although we're a small team, we do have a diverse set of backgrounds and a lot of experience. So I have investor director level colleagues who've got physics backgrounds, engineering backgrounds. But on the life sciences side, yes, in the dim and distant past, I did study pharmacology at university. So went to work for a fund focused on high risk, high return therapeutics type opportunities. Over the course of my career, become a bit more sort of jack of all trades, but made investments in medical device companies, tools companies, that sort of stuff. So a bit of a broader background. And I have some colleagues that work with me who have, one has a focus on sort of advanced cell and gene therapies.
Yes.
Another colleague of mine did a biology degree at Oxford and spent some time sort of in the early stage venture space. We've just been joined by Jess from Octopus, and she has an interest in, amongst other things, but in the digital sort of healthcare space.
Yeah.
So yes, whilst we're not, a dedicated fund in terms of we only do cell therapeutics, we do have some domain expertise within the team before we go out to the broader network. People that we work with.
And thinking about life sciences in particular, and this will reflect the broader market to some extent as well, I'm sure. But we're recording this. It'll go out in a couple of weeks, but we're recording this on the 18th of January. Obviously,
it's
lots
freezing. It's miserable.
Exactly. What, from a life sciences perspective, what's your view on where the market is right now, what the outlook's like for the rest of this year? I mean, I know it's difficult to predict the future, so I won't ask you for anything concrete on that, but how do you see the market right now?
Look, this maybe isn't a great answer, but I kind of always view it this way, because I've heard people talk about, where's the value of death? Where's the next, funding challenge? And I kind of think from a company's perspective, it's never easy raising money. Your next round's always a challenge, right?
Yeah.
And thus has it ever been, right? So I think fundamentally, it's always challenging to try and raise capital. I think it has been challenging of late. I think, given the macroeconomic environment, the IS funds maybe haven't loaded up as much as they have in previous years.
Yes.
Fundraising, even for some real pedigree funds has been quite hard. And I think existing funds have kind of sat on capital to look after portfolio for those reasons. So whilst I was reflecting earlier on the fact that I feel it's quite a good time
Mm.
be in the north of England, I do accept that it's probably been quite challenging times for some opportunities. And then I think it comes down to it's a little bit sort of horses for courses answer, really, which is it does depend on the quantums you're trying to raise,
Mm.
what particular sector of the life sciences market you're in. So we see, and the universities generate some really interesting therapeutics
Yes.
opportunities, but they tend to sit in the category of single asset early stage.
Yeah.
And so whilst I think there's a lot of capital out there and a lot of funds who specialize in therapeutics, when you start reducing it down to who likes platform plays, who likes portfolio plays, who likes single asset plays,
Mm.
those that like single asset plays, who likes seed stage rounds, it's a diminishing pool, isn't it? So
Yeah.
I think my advice to sort of founders or people that are spinning stuff out is investors aren't hiding. We all need deal flow. We're all trying to be transparent about what we're interested in. So it really is trying to figure out how many conversations can I realistically have to raise the money that I want. And so if you're not capital intensive, as I say, I think in the UK, the EIS investors, there's a lot of life science savvy angels who
Yes.
help shape and do great stuff. And one of the things that Gritstone's been supportive of in our ecosystem is obviously the Cambridge Angels have played a really important role in getting stuff off the ground for lots of deep tech, be they life science opportunities or not, in the sort of Cambridge ecosystem. So we've supported a Manchester Angels group to try
Mm.
and stimulate that activity and create that sort of ability to get technically savvy domain experts prepared to reinvest the rewards from their successful businesses. But what you find is, and again, I think it's about playing to your strengths, is even across our region, different areas have different strengths. So it's a lot of software money being made in the Manchester ecosystem, and maybe we have more of a heritage on the biotech pharma side, whereas if you cross over the Pennines with NHS Digital and EMIS and those sorts of guys, there's quite a good sort of digital healthcare community. So I think it's play to your strengths and focus your attention on who's got money, what are they investing in, similar things, and that sort of stuff.
Yeah, because I suppose as someone raising money, it would be easy to waste a lot of time, right?
Yeah, absolutely. Absolutely. Yeah.
Yeah.
It's getting one person over the line is a committed process, isn't it? There's a lot of questions. There's a lot of especially if you're in a very, very technically challenging domain and you're trying to talk to generalist investors who a lot of the characteristics of you're at the right stage, the quantum of funds you have to is right, but I've got to go up a learning curve and get my head around what it is you're doing.
Yes.
There's a lot of just, to some extent, one of our skill sets is just a persistent questioning attitude.
Yeah.
And,
Yeah.
if you keep on getting sensible answers, then you keep on moving through the process. But defining exactly when you get to the point of having the conviction to make the investment, that's that. How long's a piece of string question when they go, how long's your process take? Well, it depends how much information you've got to hand to help me get to where I need to get to is often the answer.
Yeah, and I suppose this is a really important point, is that from an investor's perspective, there is very limited risk in not investing in something, right? As soon as you write a check, you take a risk. And so getting to a level of comfort in that, yes, it's a risk, but you're comfortable with that risk and you think the chances of success are good. That's where you have to get to, I suppose, to make a decision to do that. And
so there's two points to what you're saying, really. So, we're not a sort of cash out fund. We're not under any pressure to
Mm.
make the wrong investment because we've got to hit a number. To some extent, we want, um, we want to be a sustainable part of the investment ecosystem in the north forevermore,
Yes.
right? The only way we're going to be sustainable is at some point in the future we will want to raise more money,
Mm-hmm.
and the only way we'll be able to do that is if we've made good investments.
Yeah.
So it's always quality first, I think, and so the bar has to be set high. So I think that's first and foremost the criteria, the lens through which we look at any
Yes.
opportunity. But the flip side of that is we don't expect every investment that we make to succeed. So we don't have a no fail fund philosophy. And that's obviously what drives that certain things are not right for us because we're looking for things that have really high returns potential because
Yes.
we don't expect everything to work. So the things that do, we want to be really big and successful. So yeah, we have to kind of balance those two things, like take enough risk, but keep the quality bar high. So we're not afraid of not doing deals. We do want to do the right sorts of deals, and we are. I think our run rate at the moment is probably a deal a month since we had our first close. So we are active.
Yeah,
absolutely. And that's because we want to get the portfolio to a reasonable size, such that attrition doesn't kill us.
Yes.
And we maximize the chance of doing some really, creating some really great opportunities.
Yeah, absolutely. And I guess, in life sciences, given how, and you touched on it earlier, given how technical these propositions are, you're not going to be as expert on each one as the founders are, of course, and have that depth. But I suppose from the point of view of the people who you're getting pitched by, the question then becomes, okay, so how do they take you on that journey of understanding to the level that you need to the market, why their technology is different, the competition, to understand that risk in a way that makes it viable for you?
It's a whole different podcast for you, I suspect, in terms of that. How do you pitch to investors? But the real knack, isn't it, is to boiling it down so that it is understandable to a layperson. Nothing should be so complicated that it's not understandable. The really nice thing about life sciences is there are actually a lot of precedents out there.
Yes.
So the UK has been really good at building certain types of businesses where that fundamentally it would be possible to build a business that looks like contract chemistry business, build lots of those, or a therapeutics business. We've had lots of success there. So there's people with the right experience to help early stage companies on the journey. And to some extent, VCs are marriage makers. It's get our head around this, have an open dialogue about what's missing, what could add value. Guys like yourself, help in that regard because people are fundamentally the most important thing in this journey. And it is a journey. So, as long as we're having conversation, it doesn't matter what stage you're at, as long as you've got an aligned view as to what needs to be done, then money's the great lubricator, isn't it? So we can take risk away and change the probability of success by funding the right activities.
Yes.
So I think to your point about we don't know as much about the founders' business as they do, there's a half truth in that. They know more. They know more about the technical piece that they're doing, but probably need some help, certainly with the seed stage deals, in thinking about the business that they are going to build. And that's where organizations like yours and ours should play an additive role. It's more than just the money, isn't it? And so that's what we'd like to do. So yeah, that's.
Yeah, no, that's a good point, and I think one that often gets underestimated by people going on this journey, right, is that you can have the best technology in the world, but you've got to build a company and a business around it.
Yeah,
and that's not straightforward.
there's different ways to go about it. There's like,
Mm.
talking to one company at the moment who've gone the bootstrap route, hold their hands up and say they've made a lot of mistakes, but they've never, nothing's destroyed them yet. So they're
Yes.
actually in a really good position. And there's two things, isn't there? Which is you should take the VC money to accelerate your journey and, you know, reduce risk, increase the growth trajectory. What we don't want to do is use our money for people to get smart about something that they don't
Mm.
understand, i.e.,
Mm.
the business engagement in a particular
Yeah.
marketplace. So that's where an open conversation about what do we, don't we understand, what risk are we prepared to take, um, and how do we help manage those risks. That's where the people piece comes in. That's why happy to do stuff like this, because I genuinely think that for you to do your job well, you've got to have that open and honest conversation with management teams.
Yes.
And sometimes it's a grey area, isn't it, in terms of what exactly is the job description of the role. Sometimes it's functions that we don't know, and they need guidance, and they need, so it's not just a find us this. It's actually
Mm.
you need to get your head around what the business needs, what's beyond this, so you have some
Absolutely.
um, temporal planning in it. So yeah, with the early stage companies, it's every challenge is ahead of them. Any aspects of the business could trip you up. So
Yeah.
our job's really to understand what, to some extent, isn't it? The early stage investors looking for a rough cut diamond. If
Yes.
you look for it to be perfect, you could find reasons to walk away from everything. You have to find the reasons why you like something, and then work really hard to make it better.
Yeah, absolutely. Absolutely. And I do want to come on to that in just a second. Just on your point about people, um, it's a particular challenge in early stage companies, isn't it? Because you don't have the sort of resource and the bandwidth to bring in lots of management and that kind of, everyone has to do stuff, but
Yeah,
also you don't necessarily want to keep hiring above the people that you've brought in. So it's kind of balancing that ability to do the things that need to be done with that potential to grow and that scope to grow and that kind of thing. And that's often the challenge that they encounter is, well, we need this now, but in 2 years we're going to need this, and how do we balance the tension between them?
success breeds its own
Yes.
challenges, and there's nothing so queer as folk, is there? So
Hmm.
it's like everybody comes into this with you know strong opinions, you know uh, positions to take, so it's not easy. And I think the secret is just need to talk about this stuff, don't you?
Mm.
Be open about it, and we don't have to do everything. So if we don't see eye to eye with, people on what needs to happen, that might be a reason to walk away from a
Yep.
transaction. If we do, then it's reason to know what we're doing. And often, sometimes, look, uh, I'm quite happy for people to go and prove us wrong. So we have,
Mm.
and a lot of investors are probably like this. We love to build relationships with companies um, where maybe there is an element that goes, do you know what, it's just not quite right for us now, but we really like it. We'll try and be helpful. And if it comes back in 12 to 18 months, kind of having proved us wrong and having done some
Yeah.
stuff that we were maybe a little bit skeptical about, well, again, that's how we build conviction in something. It's like, I genuinely didn't think you could do that, but you've shown me the evidence to say you can.
Yes.
So,
Yeah.
I'm not minded to certain things. And some companies need to, you know, demonstrate that
Mm.
I have prejudices, born of 20 years plus experience. But if somebody can demonstrate to me how they've overcome something, then happy days, right? So
Yeah,
sometimes
absolutely.
it's a not now, but companies go away, and if they've listened to feedback, come back in a different shape, then great. So
Yeah.
yeah, that does happen a lot, actually. So.
Yeah, I can imagine. And going back to that idea of that rough cut diamond, which I think is a really nice way to put it. So you're not looking for the perfect business, and you're not going to get huge returns on a business that's already perfect, right? Anyway, so it doesn't fit quite the
Premium
right.
price, yeah.
Yeah. Um, how do you make that assessment then? For you, it's going to be different for every investor, but for you personally, what are the most important things that you look at?
So I think we have it's people always,
Hmm.
important thing to take a view on. Market opportunity, it's technology differentiation, its business model, and its returns, I think.
Okay.
So they'd probably be the five areas that we kind of drill down into um, and
In
have a
that
think
order
about.
or?
Um, well, it's interesting actually because I think we need to be comfortable on all of them.
Mm.
So, and we have other things as well. So, um, Northern Gritstone is a purpose-driven investor. So there's some prerequisites that we absolutely need to see. So that purpose and impact is also
Hmm.
important to us. So we tend to look for companies that are addressing the UN sustainable goals, and there's
Right.
20 of those. So if you're not sitting within one of those, it's probably not for us. Um, and then the other thing is obviously you know, location is important to us. We're
Yes.
looking, but it's by choice. So our investors are um, financial investors like M&G Impacts Fund. They sit on our board. So we do this because we think we talk about profit with purpose being a
Mm.
virtuous circle. So a sort of an impact of us building great businesses in the north of England will be high value jobs in the north of England.
Yes.
That's not, we're not being measured on that. It's just going to be a consequence of us
Hmm.
doing the right things. So they're really important to us. And so we would look at that and we could tick 5 out of 6 boxes on what's important to us. But if one doesn't feel right,
Yeah.
we might walk away from a transaction. So I genuinely think it has to be a holistic view, that we're comfortable, you know, that we understand the strengths, weaknesses of the team. We understand where we're going with that. We understand the market opportunity. And you will have seen this, won't you? It's like, as I say, um, companies can really help themselves in this regard. So I saw a really, really nice oncology proposition um, whereby the early stage investors had done a ton of research. So it could come along saying, look, here's the peer group, here's what's gone before, here's all the transaction dynamics, this is the journey we're going on. So one of the things I see quite a lot is like a pitch deck with 11 slides, which
Mm.
kind of intrigues you and draws you in, and then no substance behind it.
Right.
When you ask competition, it's like, oh, there isn't any. You go, it's never been the right answer to that question. So I think what's nice is if there are areas of interest, and it's probably true for all VCs, they'll all say, look, people, and that might mean different things to different
Yeah.
investors, market opportunity, different scale of opportunity. Some people can make the returns potential if the business sells for 20 million or sells for 50 million.
Mm.
Others need to be able to see 200 million exits and all the
Yeah.
rest of it. So that's where that horses for courses argument comes in. We'll always look at comparators. We're taking a different risk if we invest in a market where there are no buyers. So there are certain areas of therapeutics
Mm.
where that's a challenge. And if there's no buyers, there's no investors. And if there's no investors, how do you raise the money after your early
Yeah,
stage
fair
round?
enough.
Versus, as I say, this oncology one, which was brilliant, which is like, here's a load of precedent licensing deals, exit deals, from generations above. Here's how technology is differentiated. So for any one of the 10 slides you might get in a pitch deck, they'd have like PDFs sat behind it with a
Hmm.
ton of supporting evidence. That's what gets you through the process quickly, because it's like, I might be starting at ground zero about what I knew about their particular target, but they've just, rather than me spending a load of time looking in our databases, Googling, it's
Yeah.
kind of like, here you go. This is what we know. This is what you're going to be interested in. Here it is, all nicely packaged up. So I think
Yeah.
there's a big difference between It's not an excuse to say we're early stage not to have done some of that homework. I don't think so. That if we're looking at those areas and there's just no substance there, the tricky one is often that path to value. How does the economics work in a particular sector? Because it's and that's where the people piece is important. If you've got like a really smart technical solution, it might be really smart, but if you don't understand the things that will get in your way of commercializing it, like your customer needs to see a 3-year trading history and you haven't got it, well, how are you going to overcome that, or whatever it might be. So I think that marriage of, the smart science that's going on with whether it's non-execs or interim type people, but somebody who goes, I absolutely can explain to you that how we walk this to market. That's the really challenging bit, and that's the bit where if we can get comfort on that, then you understand. Effectively, we're trying to understand within those areas that I've talked about the milestones, the KPIs that the company needs to achieve that's going to change the value of that business. And then you need to validate that, don't you? So that's, I guess, the bit that we do, trying to understand that.
Yeah, and I suppose to your point around doing that preparation, doing that homework, giving that evidence, there's as you said, there's part of that is you then have the confidence that there's been work done on that, the evidence is there, it's been thought through, which again, I guess speaks to the first point around people in that it just gives you an insight into how they operate, right? And
how they think and how they operate, right? So isn't it? So it's a bit like companies come against challenges, and it's not that anybody's necessarily got the answer. I know exactly what to do here, but people might have this is the process I'd expect us to go through. Have we thought about, show me the evidence? And it's a bit. So sometimes that it's the how you get to a decision is more important than the decision you make. And that's a little bit the argument, I guess, on the people side for why pay a fee to a recruiter. Well, because if this person is fundamentally going to change the value proposition, we want to find the best person for the job, not the best person we know within our small network for the job. That's in a nutshell, isn't it?
Absolutely.
So you want to run a process because the process delivers more value. And I think you're right. Part of, whilst it might be frustrating for founder management teams, sometimes, there is never a bad due diligence question because you're always, I could ask the dumbest question in the world. And if they treat me like I'm dumb and I just did it to see how they treat me, then I'm going, well, we don't have a very good relationship here. And if they do that in front of a customer, then are they really going to close business? So it's all, relationships aren't built in a 1-hour pitch meeting, are they? It takes time. You need to see people doing what they say they're going to do. That's how you build the sort of mutual respect. So I sometimes think that it might feel like the DD process is a bit protracted, but there's value in the process. Frankly, it was starting to build a relationship, aren't we? So sometimes it's like, I guess just, bite your lip, don't show your frustration straight away and just sit back and try and put yourself in the other guy's shoes. That's, we're trying to learn, we're trying to understand your drivers, your motivations, your ways of working, where we may or may not have challenges. So we can think about ways and means of getting on together. Because this is like, at the end of the day, I always say, look, it's a two-way street. We're doing diligence on you. Hopefully in an ideal world, you've got a choice of investors. We've got to compete for, why would you benefit more from having us on your share register? I'm very happy with that. But as I say, you can't do that in 1 or 2 1-hour meetings.
No. And it's, we're not talking about not much money here a lot of the time. So, it's fair enough.
But I think also as well, that's an interesting point. You should care as much, so it's not my personal money, right? So I should care as much whether I'm making 100k investment as whether I'm making a £5 million investment. And that's kind of our investment range. It's Because to some extent, that often, you make your first investment, it's quite a tough discipline to go, oh, I'm happy to just walk away from that. You're often buying into the next one as well. So we try to be quite disciplined about that and actually challenge ourselves to think just as hard, whatever the check size, right?
Right. Yes. Yeah. No, it's a good point. And I think, this kind of picks up on what you were saying earlier. It's that process of how you come to the proposition and the plan and things like that that's important, because any business plan, it doesn't matter how good your business plan is, as soon as the ink's dry on it, it's worthless, right? But what you learn through that process and how you sort of developed your perspective through that process is the important thing, because things are going to happen. However thorough you've been, things are going to happen that you don't expect.
Yeah, exactly.
Yeah. No, that's really helpful, Mark. Any final pieces of advice you'd leave us with for people who are out there trying to raise money right now in life sciences?
I think for those early stage companies, it is about trying to build rapport. It is about trying to bring conviction. Bear in mind that, beauty is in the eye of the beholder. So a knockback from one fund doesn't necessarily mean, everybody thinks that way.
Yes.
Don't assume that more than than the others. There are some very specialist funds who've done tons of transactions potentially in your space and know just as much about it. So kind of treat people with respect. And I think the other thing is, look, don't be afraid to show the things that aren't strong about your proposition.
Right.
Because it shows that you've got a sensible view around it.
Yes.
And as long as you're saying, but here's how we, this is why we want the money to take advantage of this really exciting opportunity. But we are weak here because it's just the stage that we're at. So, people, if they're investing in that stage, will understand it. And much better to start with an open and do your sales bit first. But as the process evolves, be very open and transparent, because I'd rather work with open and transparent people rather than have stuff come out of the diligence process, which you always will, right? Which you're then going, why didn't you tell us about this? So it's getting that balance right. Be salesy to start off with, because you need to excite somebody. But then, don't be afraid of showing the things that you think are weaknesses, right? Because early stage investors, as I said, we're looking to try and money can fix those things normally. So that's what's in your plan, isn't it? We're going to fix that with this cash. So that would be my advice. Be salesy, but also be open and honest.
Mark, thank you so much for your time. It's been really helpful. And really appreciate you coming on.
No, it's been a pleasure.
Thanks for listening. Outside of hosting podcasts, I'm the CEO of a company called Singular. We work with biotech businesses from seed to Series B to help them build a brilliant culture that delivers on their milestones. Come check us out at www.singular-biotech.com, and I'll see you next episode.